Hello, ladies and gentlemen. Marty Erico, TradersAudio.com, in the Energy Pits at the NYMEX CME Group floor in New York. We're going to talk about some general comments on crude and natural gas. First and foremost, here we see crude have its inventory number today, showing actually a build in inventories. And in the gas and in the distillates, we saw a draw. So there's somewhat of a divergence here that we're running into at the moment with the inventory products for the most part, but that's just something to keep a note on as we run into the later part of this week, and we're coming into the last trading day of the week tomorrow, this holiday shortened week, I should say. We saw crude come off the last couple days pretty hard, and we see volatility spike in a big way. We see vol up about 4 vols in today's trade, and then it came off just 1 vol towards the end of the day, but relatively higher volatility, and the implied vol about 28. Back month even show higher vol up to 30, 35. So huge volatility shift from the norm that the new norm we've been calling $20 or 20 in implied volatility, 20%. OVX trades up to $20 as well, $28 today. $28 as well. So this is a big shift here in volatility that we're watching, and if we can continue this grind to the downside and we can get a close and settle below here that 92 even level, that can easily bring us back down to $90, even into the $86 handle, as I saw some interest in the options today in the options pit with those strike levels. But for now, in the options, I'm just seeing once again this 92 and a half, I should say 92 even holds, then our new range will be 92 up to 96. But if we can get below that $92 level, then we can definitely see 90 in a pretty quick way, because volatility is firm in those back months. So that's really kind of it for the crude at the moment here, as we did settle below $93 even. Again, we closed and settled the day around 92.80. So no news on the docket tomorrow, so that's going to be a big thing here. We're going to definitely just have to really watch these levels. Been a big way for the crude and pit activity, increased activity in the pit today. We saw some pretty unusual strike levels trade. We actually saw the April 110 call trade over 180 times. It goes for 2 cents. I mean 2 cents, not 20. 2 cents. Implied vol on the trade was about 28%, and the underlying was about 92.84. We also saw big put activity as well in the April 75 put. We saw it trade over 500 times, believe it or not. It goes for 6 cents, and the implied volatility on that trade was huge, around 42%, and the underlying was around 92.84. Again, same price underlining as that big call. So again, pretty big, bold positions that are made in just terms of, I guess, some risk moving around, risk premium down today a bit. So we're also going to be looking at some bigger trades here. We see the April 90 call trade for $1.15. That went for about 100 times. We saw the 92 put trade over 500 times as well. That's the convincing us that we possibly could get below that $92 level and trade down to 90. So again, that 92 put traded pretty popular in the pit. Again, I saw a big size 500 lot trade go off. It probably traded about 1,500 times. Now, just shifting our attention to natural gas real quick here. Natural gas had its inventory today. Again, came in line with expectations for the most part, and we actually saw a very quick bid in the market, but then we looked at the historical numbers, and the historical numbers were lower than expected. So we saw kind of natural gas come off after that. So natural gas started trading lower in the day, and now we are in a simple range of 320 to 330 for the most part here. We got a short-term weather forecast that came out showing us colder than expected temperatures, and then we had a longer-term forecast out showing us warmer than expected temperatures. So that divergence in the weather right now is causing us really kind of to stick in this range from 320 to 330. Now, we're going to need a catalyst to break us out of this range because of that divergence with the weather forecast, and that catalyst could be anything from something being on the demand side of the spectrum, increased demand, decreased demand. Obviously, if there's a significant weather forecast that's coming out, that will be obviously agreeing to one side, whether colder or warmer, or type of increased manufacturing can definitely move this market. But volatility, pretty firm in the natural for the most part, but kind of came off just a bit today, but still firm, I would call it. I wouldn't start calling it soft yet. So this is Marty Erico from the CME Group floor in New York at the NYMEX in the Energy Pits. tradersaudio.com.